you need to consider the three exit options that I'm going to be talking about in this video. So most business owners, when they want to exit their business, they think that selling their business is the answer and the solution to what they want to achieve. But when I'm talking to business owners, I get into what is the exact reason that you want to sell the business? What is the outcome that you want to achieve when you are selling your business or when you want to sell your business? And the three types of exits that exist are operational exit, strategic exit, and a complete exit. And depending on what your goals are, what you want to achieve, any one of these exits might be the right solution for you. So the first one is called operational exit. An operational exit basically means to exit the day-to-day running of the business. Most business owners are working 40, 50, 60, even up to 80 hours a week in their business. Of course, the famous saying is a business owner is never not working. And that just blows my mind. But business owners, they normally start their business, they're involved in the sales of the business, they're involved in the delivery of the business, meaning the product or the service, they're involved in the accounting and the finance, they're involved in everything, and they continue to work in the business. If you want to sell your business, you have to do the operational exit. Operational exit basically means to exit the day-to-day operations of the business and become a strategic owner of your business. And then from strategic owner, you can do a complete exit, but you can't jump directly from being in the business directly to doing a complete exit. It just doesn't work like that. I mean, you can, but the valuation of your business will be so low and it'll be very difficult to sell your business. And that's why many businesses stay on the market for such a long time before they actually even sell their business. Why? Because they try to jump the gun, they try to jump the process. So when you're doing an operational exit, all you're doing is you're identifying what areas need to be improved so you are no longer involved in the day-to-day running of the business. Let's take an example. Let's say you are involved in the customer relationships of your business. You're doing the sales and you're actually managing those customer relationships. That is the most dangerous place to be if you are looking to exit your business, meaning completely sell the business. If you are directly involved in the customer relationships, if you're directly involved in the sales of your business, that is going to have the biggest impact, negative impact on the valuation of your business. So you have to exit that area of your business. But even if you're doing any of the other roles and you're still working in your business 40, 50, 60, up to 80 hours a week, then an operational exit is a must. So when you do an operational exit, you move from the operational role in your business to a strategic role in your business. That's where I currently sit. So I currently own a business or multiple businesses, seven-figure businesses, in which I still set the strategy of the business. So I'm not involved in the actual running of the day-to-day, but I'm setting the strategy. Anything from the immediate to normally I'm working on a 3-year strategy, and I'm working between 20 to 30 hours a week on the strategy of my business. Most of the time, I'm working around the 20-hour mark, 20 to 25-hour mark. Sometimes I'm working less than 20 hours, but I'm never working more than 30 hours. And that's when you know that you've done an operational exit of your business. When you're no longer working those long hours, you're doing a maximum of 30. And even that, if I'm ever doing 30 hours in my business, that means I'm working on a project that needs to be completed and it needs my input. If you're a strategic owner of your business, then you will be doing between 20 and 30 hours, but more towards the 20 and less towards the 30. Coming to the second type of exit, which is the strategic exit. Strategic exit means that if you're still setting the strategy, you're still setting the scene of your business and what needs to happen in the immediate term and the long term of your business, is when you actually exit that role as well and you become a clear shareholder of your business, no longer a day-to-day operator or even a strategic operator. Normally, that means bringing a complete management team that takes care of the day-to-day operations of the business, but also works on the strategy and the growth of the business. You now become a true shareholder in which you're essentially just collecting checks on a monthly basis or a quarterly basis. And maybe you check in with your team once a quarter, maybe you check in with your team once a year. As a shareholder, you're going to be setting the targets that I want the business to produce 250,000, 500,000, 1 million, 2 million, 5 million in profit, but you're not going to be the one who's coming up with a plan to achieve that. And you're definitely not going to be the person who is actually making that happen. Now, if you're a strategic owner of the business, meaning you're still setting the strategy, it's still possible to sell your business. But if you want the best results, you want to become a shareholder. Ideally, you want that to be around for about 2 years. You want that to be in operation for about 2 years. Why? Because if you do want to do a complete exit of your business, any good business buyer is going to be looking at the last 2 years of your business. So if they can see that the operations have been running clearly, cleanly without you for at least 2 years, then that's a positive sign. In fact, when a person is looking to buy a business, when an investor is looking to buy your business, they're looking at anything from up 3 years, minimum 3 years. 3 to 5 years is any good business buyer will be looking at that. And in some cases, depending on your industry and what you claim your business to be, they may be looking beyond 5 years as well. So having your business being managed by another team for at least 2 years is going to be a very, very good outcome for a complete sale. Like I said, you can still be a strategic owner of your business and sell your business, but you can never be an operator of your business and sell your business for a good life-changing amount of money. What do I mean by life-changing amount of money? 5 million ideally, because you can invest 5 million and you can live off the proceeds of the dividends or wherever you've invested, the rent, for example. If you've done in property, you can live off that kind of money. Well, there's levels, so it's obviously 10 million. 25 million is really where you become into financial freedom, complete financial freedom, but that's a story for another video, or that's for another video. Now, the third type of exit, which is the complete exit. Now, many business owners, let's take a pause here, because many business owners want to go, I'm operating, and I want to go straight to a complete exit. Not preparing your business for sale, not doing 3 to 5 things at the very least to prepare your business for sale is going to hurt the valuation and the actual sales price of your business by millions of pounds or dollars. At the very least, it's going to be high hundreds of thousands. You are actually jeopardizing the value of your business by millions of pounds or dollars by not preparing your business for sale. It can take as little as 6 months to do the preparation work to ensure that your business is ready for sale and can achieve the full value of your business, of the asset that you've built. Your business is an asset. Why not treat it like one? Prepare it for sale completely, properly, to ensure that you can realize the true value of your asset. So a complete sale is essentially selling the business to a third party, to an investor, to a private equity firm, to another business, to an individual investor, whatever it may be. And that's actually very simple. You have done the preparation work, you've exited yourself out of the business, you've done the preparation work and done the other things that are important to ensure that your business is a sellable asset that's attractive to buyers. So you need to think of your business as a product that you're going to be selling to a customer. Just like in your current business right now, you are selling a product or a service. You have packaged it in a way, you've prepared it in a way that's attractive to a buyer, the individual product or service that you're currently selling in your business. When you're selling your business becomes a product. Your business becomes a product that you need to make attractive. So that little bit of preparation work that you're going to be doing is going to increase the attractiveness of your business, and therefore people will pay you its real value. And that's when you can achieve your complete exit. So if you're still stuck in the day-to-day of your business, or you're making those decisions, I work with business owners to ensure that their business is structured and prepared to increase and realize the full value of their business before sale. You can click the link in the description and get all the information that you need from there. The key thing to remember, there's 3 types of exit. Operational exit, where you move from the day-to-day running of the business to becoming a strategic owner. And the second type of exit is your strategic exit, where you move from being a strategic owner of your business to being a complete shareholder. And the last exit is a complete exit, where you are selling the business to a third party. Don't jump the gun and try to go from operator directly to exit. You can sell your business, but it's going to hurt your valuation. Make the steps and do the preparation work to ensure that you're doing the right thing for yourself when you come to sell your business. I'll see you in the next video.